Everything is going down today, but some things are going down more than others. The virtual protocol is one of the worst performers in the last week. Now, does it make sense to buy the bottom and other potentially assets that could recover even faster than the virtual token itself? Let's have a look at the data, the things most people are not considering. Because let's work with the assumption that overall we are still in a bull market and this is simply just a retracement. Because Bitcoin itself is still above the 120-day simple moving average. So that's the best moving average historically when we run the numbers. In other words, it makes sense to buy Bitcoin whenever it's above the moving average. It makes sense to sell Bitcoin or to even go short when we are below the moving average. Currently we are above, so crypto and Bitcoin and everything tends to still, in the grand scheme of things, go up. And so let's play with this scenario. Maybe we drop a bit further, but then potentially we bounce off that simple moving average in Bitcoin. How can we buy the asset that's going to benefit the most from this rebound? Because here's the thing, among the top 100 cryptocurrencies in terms of market cap, virtual protocol did not perform well at all. It went down by 24% in the matter of just 7 days. It went down by 24% in the last 7 days alone. At one point we had been above $5, now we are slightly above $3. Now there are some reasons for this depression in the price. For example, the protocol revenue is very, very low historically speaking. However, the trading volume of virtual tokens themselves tends to continue to rise. It's not at all-time highs today, but the overall trend is still bullish. We can also see how the number of buyers and sellers tends to still grow over time. So maybe it makes sense to buy that bottom. Now what we're seeing over here is the virtual price relative to Ethereum. So how much did we outperform holding virtual over plain old ETH? And since the middle of May of last year, virtual outperformed Ethereum by more than 2,300%. But again, we are currently dipping. Are we going to see a recovery in a similar fashion how we've seen it in the past? Does it make sense to buy low and sell later high? Now, first of all, I find it very impressive how much the price can go down while the number of investors is actually not dropping that much. On the left side, we see the number of wallets that have 300 virtual tokens. So that's currently $1,000. In the middle, it's 3,000 virtual tokens or $10,000. On the right, it's $100,000. Now, the small retail investor continues to accumulate. The number of those wallets is going up. For medium-sized retail, it's a bit down in the last few days. It seems like, relatively speaking, the largest correction had been in the number of whales, right? The wallets that have at least $100,000 worth of the token. But still, this went from 960 wallets to currently 900 wallets roughly. So a drop of 7 to 8%, while the price went down by 37%. So it's a few whales that can move the price massively. It's not the small retail investor that's suddenly starting to sell. And so I believe that the market makers and the centralized exchanges do play their role here as well. Most of trading volume now happens on Gate.io and on Bybit, not anymore on Uniswap, on the decentralized exchanges. So the price discovery happens among the big guys. But again, we're working with the assumption that the bull market continues and that we're going to see this recovery. What's the best asset to buy? Because there's not just the virtual token itself, there's also the AI agents that come from virtuals. And following the same kind of logic that we want to buy what has the most potential to rebound, and where the rebound might be the most pronounced, we can have a look at the AI agents that got sold off the most. So we've got the Convo agent and we've got Vader AI. The virtual token itself went down by 37%. Vader AI went down by 55% and Convo went down by 67%. Now, minus 30 something percent or minus 60 something percent, does it really make that much of a difference? I believe yes, because in case we do see the recovery, say to old all-time highs, then if we buy now low, the most depressed assets will make way more performance. If the virtual token was to recover to its old all-time highs, the resulting performance would be plus 57% from here. However, if the Convo token was to reach its old all-time highs, that would be a more than 200% return. Or in other words, it takes a 2x to recover from a 50% loss. It takes a 3x to recover from a 66% loss. I don't have a crystal ball either whether or not we are going to see that recovery. I don't know if we are going to fall below the best moving average in Bitcoin. The market overall seems to be cooling down. But if the market makers haven't given up and they want to increase volatility again, then they're probably going to push the prices most that are now down. And that's probably Veda AI, potentially Convo as well. Now, here's the thing. There are plenty of topics within crypto that aren't very sexy, but that are, I believe, very vital to make money long term. For example, concepts like correlation. What we see over here are correlation coefficients. Did you know, for example, that most altcoins tend to be more correlated with Ethereum than with Bitcoin? In other words, it's not when Bitcoin goes up that the altcoins go up as well. It's rather when Ethereum goes up, then the altcoins go up as well. Or did you know that the correlation coefficient of the S&P 500 to Ethereum and thus the altcoin market is actually quite volatile? In other words, it does make sense to also own stocks, not just Ethereum, not just crypto. The common narrative is that when traditional markets go down, that crypto tends to go down as well, right? That crypto is simply just a levered bet on, say, technology stocks. That's not the case. The correlation coefficient is relatively close to zero. Or do you know the long-term expected returns of various asset classes, of, say, gold, of, say, the S&P 500, of Bitcoin, of altcoins? When we don't just own crypto, but we also own property, for example, and we've got that portfolio, what kind of returns do we need in order to beat monetary debasement, but also in order to, at some point, to get financially free? How much money do we need to have enough passive income to not having to work anymore? What are expected long-term returns, and how much should we actually allocate towards crypto and towards property, towards stocks, gold, bond, etc.? What actually makes sense? When there are tens of thousands, hundreds of thousands, maybe even millions of dollars on the line, not having this properly nailed down is a huge problem. And when the market isn't that great anymore and the upside for Bitcoin could be somewhat limited, how can we still make money? How can we make money from charts like this? What we see over here is Balancer relative to Ethereum. We can make money by shorting this. Balancer has very bad tokenomics. The supply increases over time, and so it tends to do worse than Bitcoin and Ethereum over the long term. And we can make money from that, again, from the relative valuations, not just from US dollar valuations. When we look at how quickly is the monetary base expanding, and we put this into relationship to how quickly are salaries increasing, we actually see that pretty much everybody is falling behind over time. And this is not just true for the poor people, this is even true for the top 5% of earners. By the way, if you earn $500,000 per year, then you are in the top 5%. But yeah, data like this is useful. And those are not necessarily the sexy topics that work well on YouTube, right? On YouTube, it's the 100x altcoin gems that get all the clicks. But when you talk about diversification and correlation, etc., people just fall asleep. But it's the long-term planning, the long-term proper allocation towards different asset classes that actually make the difference. And so have a look at all of this. Those are tutorial videos of the premium membership of this channel. It's down below, thebitcointrader.com. There's more than 100 tutorial videos in total. What are my favorite crypto macro indicators? How do interest rates impact different asset classes? We've just seen how the market got spooked because the Federal Reserve might get more hawkish. Or how do we adjust our returns for risk mathematically, right? Everybody can get more returns by increasing the risk massively, but the idea is we want to get the best returns for the risk. And so there are ways to calculate this using alpha and beta. Those are all very complex topics, but I strongly believe that it's the skilled people, the people that have most knowledge, that tend to make most money over time. Now, besides all of those tutorial videos, there are also various chats in premium where I try to be active as well. So in case you've got any questions, just tag me in a message in those premium chats and I try to reply. The membership is currently $165 per month. This is not for people that only have a net worth of $1,000, right? This is for people that actually have to manage wealth in the tens of thousands, preferably even hundreds of thousands of dollars. There is a 1-week money back guarantee as well. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. Now, if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.